MMTs, look at here. It is now 8:45 a.m. We are 2 hours and 15 minutes into the opening bell. We can see here that we have not broke the high on the 5:30 call. And we broke the high here. We just broke the high here on the 3-minute. But look at here, 970. We dropped it down to 980. Why? It's because, yes, we are getting a breakout. Yes, we're at 98. Yes, we just made another intraday trend ratio high, a 7.9. We're at 7.8. Yes, we put bids out at 880 based on that. But notice MMTs in the premium, where they're still in premium, you're breaking higher highs. That's the high of the day. But you did not break the high of 1193 in the 5:30 call. Now, on the flip side of that, you did not break that high of 1810. So there's taken premium out of the call side. As well, on the upside movement, you should be getting higher premium prints. You're not. You are not. Look, 1780 by 18. 1810 was a high over an hour ago. 1193 was a secondary high. We're coming down to 940 by 950 in that market there. We talked about these things in pre-market. We talked about how spreads on the opening bell take time to really get the right spreads. Here I am breaking all-time highs at 532.09. I've got the Dow up 188 handles. I got NASDAQ 3851. I've got that S&P 500 burning. And let us not forget that S&P 100 large cap at 10 handles up. And if we can break through the 1191.62 on the S&P, we can go higher there as well. Not only that, we have broke to that 950 low on the third entry. We have not broke the high, and this is about the call premium and how they take call premium MMTs, because when you're making higher highs, you should be getting the greater value in the premium high. We're about to break that high. This one is not. Now look at that call here. It's deep in the money. It's 12 handles in the money. Look at that put option. Look at that put option. I'm going to take that 880 bid. I finally have tromboned. I've got an 880 bid out in the marketplace on a single contract to make a market. We have made the lower low, but we did not break the high. The premium high, the 520 call, has yet to break the high. When the equity is breaking the high, the lesson the MMTs are learning is how they can take premium away and keep the lower premium to the cap of that premium, but they're taking premium low. You just made a series of higher highs here. But you did not break the highs here, and you did not break the highs here. But look at the premium that they took. There's a $3 spread now. $12.50 on the put to $9.50 on the low. The time, 9:48 a.m. Pacific Standard Time, 9/7/2001. This is, once again, understanding how they can take premium away from the call side of the market. How do they steal the premium? Well, here it is. Here it is. I'm making higher highs. I'm not making higher highs here. I haven't printed the higher high. 1810, I'm about to print it. No, 1790 by 1810. And I'm breaking up. I broke higher. The lesson learned is that people do not understand price premium and how they can take premium away. And they do not. And how they can take premium, how this side of the market just hit 9.30. And we talked about this 530 put. Let us not be in denial about the accuracy of that price action based on a relatively breakout of intraday highs, taking premium away from the call side, still in premium. That is the reality. You did not break the high on that breakout. And that was an all-time intraday high of 532.26. The lesson has been well learned on how they adjust these premium cycles when you should be, this here should be printed at least 1260, and this up here should be printed 1910 to 1940. But look, you can't even take out the high based on that breakout. They did not overshoot or inflate that call option premium. People do not understand this market as a market maker. No, they don't. There are different things that go involved in these price action models, in these option models here and now. Witness it live. Witness it as it's occurring. Witness it as it's breaking out. Witness as that call side, they keep taking that down to our wholesale price. We are thromboning here. We made a high of 0.82. Every time you make an intraday trend ratio high, you should be getting the higher premium valuations. We have yet to bust that 1810. It's 20. It's by 30. But take a look at the highs. We just made another intraday high and a 369. Look at the premium come down. I'm taking this premium to $8.40 based on if we break that 532.46. We broke several narrow range print highs. We're not looking for the narrow range print high. We're looking for the higher volume price action print high, which in return would bring this down to 840, cancel the 880, bring her into 840. Watch that bottom, watch that reversal. It's at 97. I'm at 8.4 versus 8.3. I'm making trend ratio highs. I've not broke the high here. I've not broke the high here. But look at, I went 532.46. Okay? And I did. And the thing about it is that they're still in premium here. And this is what I want the MMTs to know, that that wholesale entry to what the premium they're willing to give back and how much they take away is naturally going to be your spread. The public doesn't know that. They will sit there and barter with it. Well, early on in the live entries and exits as we're doing now, I'm going to be selling at the high again at 1810. I can hold the other half. We're strong. They're just not giving the yield. We'll come back to this trade. I've got a 930 bid right here and now. A 930 bid. This is tape number 3 live on September 7th on that intraday high here and now. Time 8:51 a.m. Date 9/7/2001. What is the major entry and exit topic? Just learning how to be a market maker here. Learning how they can steal premium as they're doing it live before your eyes. You're breaking higher highs and you're not getting the exhaustion peak or the exhaustion lower peak here yet. And once again, you're looking for the blow off top here and the blow off bottom here, and then you're looking at where that premium adjustment's going to come into play.